If your money is just sitting in a sad little 0.5% interest savings account, then you're in the right place. I'm going to dive into the best paying savings accounts out there in the UK right now. And trust me, there's some juicy options out there for you to consider. From easy access accounts to fixed term, notice accounts to regular savers, I've done the digging so that you don't have to. And whether you want flexibility or whether you're ready to lock away your money for guaranteed returns, this is the information you need to make your money work harder. And make sure you stay to the end because there are some key need to knows that you need to take into account when you're making a decision on these accounts. So let's get into it. But before we look at the accounts that are offering us the best savings rate for our money, we need to understand any tax implications because that will determine the mix of accounts that we might want to utilise. Now in the UK, we have something called a personal savings allowance. And what this means is that you can generate up to £1,000 worth of interest without paying any tax on it. That's right, £1,000 in interest tax-free per year. However, the good news stops there because the £1,000 allowance is a maximum and only accessible if you're a basic rate taxpayer. That means you're on the 20% rate of tax. If you're a higher rate taxpayer, your allowance is only £500 in tax-free savings interest. And if you're earning more than that and on the additional rate of income tax, which is 45%, you don't get any savings allowance. I'm sorry. But why this is important is because savings interest rates at the moment are hovering between 4 and 5%. That means that even a basic rate taxpayer only needs to save £20,000 in a year to max out their personal savings allowance. If you're a higher rate taxpayer, then that means you only need to be saving £10,000 in a savings account with a 4 to 5% interest rate to max out your personal savings allowance. So given this, I'm going to call out some of the top paying cash ISAs as well as the savings accounts to ensure that you can maximise your returns because all money that's deposited into a cash ISA is tax-free, up to £20,000 per year. If you've ever scoured the web looking for the best interest rate on a savings account, you will understand that there are so many accounts and so little time. So let's break down the different types of savings accounts that exist so that you can understand which might be more beneficial for your goals long term. The first type of account we'll look at are regular savers, and these are usually accounts that are linked to a current account and that you can pay in a small amount of money each month over a set period for a set return. It doesn't take a genius to understand what an easy access savings account does, but if you do need quick access to your money and want to plan for emergencies, then this is the type of account that might be most beneficial for you. Notice accounts are accounts where you have to give a set period of notice before the money and the interest is returned back to you. And fixed rate accounts are like a vault. You just put the money in, lock it away, forget about it, and in a year or two's time you come back for the juicy returns. And just like a vault, no touchy. Before I jump into the best paying accounts out there at the moment, all UK registered banks and building societies sign up to the FSCS scheme, which means that £85,000 of your saving is protected in the event that that bank or institution goes bust. Basically, your money is strapped in, locked away, and you can get that back in the event of something bad happening. So enough of the details, let's jump into the best performing savings accounts out there and those accounts that are going to generate you the best returns for your money. But a bit of a disclaimer, these rates do change quite frequently, so please do check these before you commit to a specific account. Regular savers, so these are the accounts usually connected to a current account and you need to be an existing customer of that current account before you can open a regular saver. With regular savers, the interest rates can look quite juicy, ranging from 6 to 7%. However, the actual amount of interest you'll get back at the end of the regular saver period that you're tied in for is actually likely to be around half of that. Nope, this isn't a scam. It's just because you're drip feeding in the money month by month rather than dropping a lump sum right at the start of that fixed regular saver period. It's tripped a few people up before, but the rate is real, the money that you get is real. It's just that the interest builds slower because you're drip feeding that money in each month. Now with regular savers, there's a few things you should be aware of before opening one of these accounts. The first is that you need to deposit a certain amount each month, and this will vary by bank, but tends to range from £50 to £300. Second, you can have more than one regular saver account open across different banks, so you don't need to limit yourself to just one of these type of accounts. And thirdly, the headline rate, the 6 to 7%, usually lasts for a year, this fixed regular saver period. So make sure you set a reminder so that you can ditch it and change over to a new regular saving account at the end of that period. So if you're looking for a top paying regular saver account, these are the top 3 accounts out there in the market right now. My third place pick is Nationwide Building Society, with a regular saver offering 6.5% variable interest rate per year. With this account, the maximum you can pay in per month is £200, and there is no minimum deposit, which means you can skip months if you don't have the amount to put in for that month. It also allows for some penalty-free withdrawals if you need to take money out of your regular saver, so it could be useful in case of an emergency. My second place goes to the Co-op Bank with a 7% interest rate on their regular saver, and this is a variable rate for 1 year. With this account, you can pay in slightly more at £250 a month. And again, there's no minimum, so you can skip months if you don't have the money to deposit. The plus side of this account is that there are an unlimited number of penalty-free withdrawals that you can make. Now, my top choice for a regular saver account goes to the regular saver offered by First Direct. This offers a 7% interest rate and it's fixed for 1 year. And with this account, you can deposit even more. It's £300 per month, which maxed out over the 12 months would be £137. A couple of watch outs with this account though, you're not able to skip any months and there's a minimum deposit of £25 per month. You also aren't allowed to withdraw any money that you deposit into this regular saver. And if you do, the rate reduces down to 1.75% interest. So let's move on to the easy access accounts and see what the winning savers rates are there. Now, if you're a basic rate taxpayer with £20,000 worth of savings, or a higher rate taxpayer with £10,000 worth of savings, you're better off depositing most of that money into a cash ISA to ensure that you don't pay any tax on that return. And there are 2 providers that are currently battling it out to be the highest interest rate providing cash ISA. Now, these 2 providers are Moneybox and Trading212, and currently both are offering a 5.05% interest rate. However, there's slight nuances between these 2 providers, so let's break that down a bit further. For Moneybox, that 5.05% rate is made up of a 4% variable rate and a 12-month 1.05% bonus, and that's just for being a new customer. The minimum that you can deposit into this account is £500 with a maximum of £20,000 per year to ensure that the money remains tax-free. The interest on this account is paid annually, and it's worth noting that this account isn't a flexible ISA. And what that means is that if you take money out of that account, you lose that from your £20,000 tax-free allowance per year. So let's say I had £20,000 in a cash ISA. If I took £5,000 out of that account, my allowance reduces to £15,000 and I can't top that up with an additional £5,000. For the Trading212 account, the 5.05% interest rate is made up of a 4.35% variable rate and a 12-month 0.7% bonus for being a new customer. There's a slightly lower minimum deposit threshold on this account, and you can just deposit £1 with the same maximum £20,000 per year tax-free allowance. The interest on this account is paid monthly, and it's worth noting that this is a flexible ISA. So that means if you take that £5,000 out of the £20,000 you've deposited, you can still deposit another £5,000 to top up back to that £20,000 within the same tax year. Now, with the normal easy access savings accounts, you'll notice the rates here are around the same level as cash ISAs, and that's why it's important to max out that £20,000 tax-free allowance each year into a cash ISA to ensure that you're maximising the returns that you can get. But for reference, here are my top 3 recommendations for normal easy access savings accounts. Now, in third place, and if you prefer to bank with someone that's more familiar and that you've heard of, Marcus, owned by Goldman Sachs, are currently offering an easy access saver which pays out 4.3% interest. Similar to the cash ISAs, this is broken down into a variable rate and a 1-year bonus. In this case, 3.81% variable and a 1-year 0.49% bonus. The minimum that you can deposit into this account is £1, and the interest is paid monthly. Now, in second place is Charter Savings Bank with the top unlimited withdrawal rate of 4.59%. Unlike the other accounts, this isn't broken down into a variable and a new joiner bonus, and the minimum that you can deposit is £1, and the interest is paid either monthly or annually, depending on your preference. And in first place is Atom Bank with a 4.75% easy access savings account. Now the watch out with this account is that there are limited withdrawals and the rate drops to 3% in months where you do withdraw. But there isn't a minimum that you need to deposit, and the interest on this account is also paid monthly. Now jumping into our best performing notice accounts, you'll notice, pun not intended, the rates start to creep slightly up, and this just reflects the fact that you need to wait for that notice period to be able to access your money. Now for these accounts, the notice period tends to range from 30 days to 120 days. So for the purpose of this video, I'm just going to show the best performing accounts at each extreme. So the best performing notice account with a 35-day notice period is Octobury Bank. And if you opt for this account, you'll get a 4.65% interest rate paid monthly into this account. It's worth noting though, there's a £1,000 minimum deposit. Now on the other end of the spectrum, Octobury also offer a 120-day notice period account, and this account pays 4.85% in interest. The same £1,000 minimum deposit applies, and the interest is paid monthly. Now between 35 days and 120 days, there's quite a large number of providers, so take a look at people like Kent Reliance or Oak North Bank, as they offer top paying rates at different notice periods. So now let's look at the fixed rate accounts and the amount of interest that you could get by utilising one of these accounts where you lock away your money for a set period of time. Now with fixed term savings, your money is pretty much on lockdown until the end of that term. So only deposit money into these accounts that you definitely won't need during that period. Right now, the difference between a 6-month fix and a 5-year fix actually isn't that exciting. So I'm just going to show you a few select 1-year fixes to give you a taster of the interest rates in the market at the moment. Because unless you're all about the certainty that's provided by tying that money up for a long period of time, there's very little reward for doing so right now. So the best paying 1-year fixed account in the market right now is by Synergy Bank. With this account, you get a 4.65% interest rate, and that is paid at maturity, which means at the end of the 1-year fix. It's worth noting that there is a £1,000 minimum deposit with this account. But if you fancy a more established name to keep your money with, then Virgin Money has a competitive 4.31% interest fixed 1-year savings account. With this, the interest is paid either monthly or at maturity, and the minimum deposit is only £1. Now we've gone through quite a large number of accounts there and it might be a bit confusing, but here are a couple of tips to help you decide which accounts might be best for you. Firstly, bear in mind that you can split up your savings. You don't have to either lock away all of your savings or keep it all in an easy access account. It's best to keep any emergency cash easy access so that you can lock away anything else and access the higher interest rates in those fixed accounts. Bear in mind here that you probably should make the most of your yearly ISA allowance of £20,000 before looking to divvy up between some of these savings accounts. And also don't just chase interest rate alone. Sometimes having access to money or the convenience of a provider might be worth that tiny little percentage in interest. But there's a couple of things we need to watch out for before we make a final decision on which account is right for us. Beware the promo rate. Banks just love dangling shiny, new, promotional rates in front of our faces for us to chase around like a cat with a laser pointer. These rates look great, but often drop off a cliff after that 12-month promotional period. So make sure you're setting an alert or reminder so that you can switch to a better paying account once that period comes to an end. And the second thing I really must stress is that if you have any high interest debt, make sure you clear that out before you worry about anything that I've spoken about today. If you have any debt with a higher interest rate than the interest rates that we've discussed today, then your best option to get a guaranteed return on investment is to pay off that debt first. Because a 5% rate on a £1,000 deposit might get you £50 a year, but if your credit card is charging 25% on £1,000, that will cost you £250 over a year. And by my maths, that's £200 worth of regret. So now that we found a home for our money where it can actually grow, let's talk about how to get more of it in the first place. If you've ever wondered how your salary stacks up against the rest of the UK by region, by age, or by percentage to see if you really are in the top 10, 5, or 1%, then check out this video and see where you land. I also give some helpful tips of industries that might pay a higher salary so you can make an educated choice as to where your next move might be. See you over there.